All right, we are live.
Thank you. We could go ahead and start. If he's still logging on, we can do roll call and the agenda.
Okay, let's go ahead and get the meeting started. Ron is be online in a couple minutes here, or within a couple minutes. So I'll call the meeting to order. This is the Finance and Audit Committee meeting for Thursday, December 8th, 2022. Teresa, will you call roll?
Absolutely. Gordon,
Here.
Bob,
Here.
Michelle,
Here.
Dr. Pandolfi,
Here.
Ron. We have a forum.
Okay. Okay, the agenda is out. Any questions or changes on that? If not, I'd ask for a motion to approve it.
So moved.
Yeah, that was yummy.
Is there a second?
Second.
Thank you. All in favor?
Aye. Are we calling roll? Fine with me.
Aye.
This is the agenda.
The agenda.
Aye.
All right. Ron, are you online? Yeah, okay, so we have everybody's wrong. All right, the minutes were posted. And are there any changes or corrections to the minutes?
No, not for me.
Not, that I ask for a motion to approve the minutes of November 14th, 2022.
I move the amendments. I move the minutes for the Finance Audit Committee meeting from
November 14th.
November 14th be approved.
Is there a second?
Second.
Okay, Michelle, all in favor? Say aye.
Aye. Aye.
All right, that's for us. Ron, are you there yet? Oh, there we go. Okay, let's move to the monthly financials. Quan, do you want to take the lead here?
Yes. For operating revenue, we received a total amount of $2.68 million by the end of November, which is about $600,000 more than last year's number. The majority of the increase is from the tax revenue. In November, we have just started to receive new tax revenue. Also, interest income is much higher than previous year. There are some new revenues we just started this year. They are small but growing. For example, like a passport service, average about $6,000 to $8,000 a month since July this year. That's about 200 applications per month. Also, we have coffee shops at Winnie's and Coburn Road. We receive rental income about $33,000 a month from them. Also, we have started a meeting events at the community hall at the genealogy. We received about $10,000 last month. Yes.
You said the coffee shops, are we operating those or are we taking in rent?
Contract a vendor, two different vendors.
So we're receiving rental payments? Or-
Yes.
Okay, perfect. Yeah, let's make sure that.
On the expenditure side, the payroll and the benefits, I believe it's in line with the expectation. About 40% of the budget, $13.6 million. Library materials, the spending rate is about the same as last year, close to 50% of the budget. All other operational accounts is close to $4 million. about 37% of the budget. Also, on the annual financial report, we report the total amount of tax abatement from all three counties. In 2021, we had about a little over $4 million in tax abatement. That number was reported in the financial statement. The number is based on the reports from all three counties. But the city of Kansas City reports its own number to us in November every year. I just received the number from the city of Kansas City. The abatement for 2021 is $1.5 million. A year ago, in 2020, that number is $1.38 million. That number, I believe, has a lot of overlap with the numbers from the counties. So we usually do not report that number in the financial statements. For capital,
Can I
sorry,
clarify, you report net? Is that a different way of saying that?
yes, well,
You don't report the abatement in here, correct?
no,
You're reporting actual cash received.
well, no. It's in the footnote section of the financial statements in the annual report, not in the statements itself.
Right.
Yeah.
But in here, the abatements don't even come into play in these.
That's correct. Yeah, the assessment is net of the abatement. For capital project fund, we spent about $3.5 million so far, which is a little below my expectation.
Cody, can you flip the page? There we go. Or,
The tab, if you go to a tab of capital projects. Yes. The next one is gift and grant fund. We received $229,000 from Kaufman in November. That's, yeah. No change in debt service. So far, we made one payment for interest. The next payment will be in March 2023. Health insurance fund. The contribution is $1.5 million. And yeah, that's what we expected. And the expenditure is also 1.5. So we have a small surplus so far, $37,000. Also, I recalculated the minimum fund balance required and the maximum allowed. The minimum is 3 months average, 3 months in total, plus the payable, which is a little over $1 million. The maximum is the 50% of projected next calendar year, which is about $1.7 million. So the fund balance current at the end of November, the fund balance is $1.3 million, which is right in the middle of the minimum and the maximum. So that's my report for the month.
okay, for the committee, just a general comment. I know we're flipping through these things, but I'd like this part of the meeting to be sort of an open discussion. So if you have questions on tabs or items as we're on that page, I would prefer we just ask them at the time instead of waiting till everything is done. So, don't be afraid to raise your hand or just chime in and say I have a question. So if you go back to the, Cody, flip back up to the general fund profit loss. One more page. Okay, so on there, Quan, I just had a question. As I noticed on the salaried expenditures, the first line under expenditures, the month to date, current month salaried is $2,028,000. The budget is $1,829,000. So So I don't know how you spread the budget. The prior year, it's also, over the prior year, a fair amount. So Jennifer's not here, right?
She's
Online.
Oh, she is. Okay. So my question, and maybe we can defer this to her page when she explains this, but, and let's do that. Is that a trend, or is that just a case of you spreading the numbers differently than what we're going to incur?
This is the first year we are presenting the monthly budget. So I don't believe I have enough experience to split, accurately.
Okay.
So
So this could just be a budget spread issue.
yes,
Okay, all right. Okay, the other, if you flip back to page 2, Cody, on that, or the second page, so are you on Excel? Cody?
No, Gordon, I'm on a PDF. Do you need me to
Okay.
zoom in?
So I've asked Teresa when we convert these on a PDF to make sure that the numbers show, because sometimes when you're on Excel, the column's too narrow, the big numbers don't show up. So for the year to date through November, our actual, if you look down at the excess of expenditures over revenues, it's 20,543,000 against last year of 19,821,000. The budget spread the Quan has is 22,775,000. And I think from our discussion, this is the bottom during the course of the calendar year. Is that correct, or the fiscal year?
yes,
Okay, so next month we should be getting revenue. So that's a number just to keep in mind. I think that's fairly close to what we projected
yes.
when we did our cash flow. So it looks like we're sort of on track with at least what we expected. To be no surprises there. Cody, if you'll go to the balance sheet, which I think is the next page or next tab. All right. And if you can blow that up a little bit. The first column is the general fund. The second column is the capital fund. A couple of numbers I just want to point out there. As we've discussed, the market rate adjustment for investments as of November were 2.2 million under cost. And we'll get into the cash flow discussion, but that will continue to be an issue subject to what interest rates are. In the liabilities line, you'll see that the capital fund has a liability to the general fund of 5.666 million. And there is a total fund balance resulting of 19,146,000. So again, that 2.2 million, that's up. The market adjustment on the bonds flows down into the fund balance as well. So I just want to make sure everybody has those numbers in their head. And then, are there any questions on the financials? Yummy, Michelle, Ron?
Well, this obviously my first reading of detail. I do have a question since we're on revenues. Will we have an opportunity to talk about what the investment loss is that's projected for this year? What is it, $1 million?
The invest, well,
1.5 million or something? I took that, I think, off the budget, but
Yes,
and that's caused by what?
the market value adjustment.
But we're not liquidating anything, is that correct?
We intend to hold it till.
I was gonna say, as long as it's held to maturity, there won't be a loss.
Yes,
yeah, there's lost opportunity of interest right now. So we'll talk about the cash flow.
That's fine. Sure.
But you're right.
It's fine. Go ahead.
And I don't think Ron's going to be on. I think.
Oh, he's not going to.
Well, we'll see.
Okay.
He's attending to,
He's still trying to get on.
I don't know.
Okay.
He's at home with his wife. So, okay, so let's move to the disbursement schedule, and Quan now puts up everything. It's in what I'll call category order, and then alphabetical within that category. I don't know if people have had time to look at it, but are there any questions on that disbursement detail at this point? If not, let's move to the personnel schedule. Jennifer, you put something together that looks different. So if you're online, can you take us through what you have here?
Well, we talked about last month where we kind of had a starting place, and but that was a pretty lean, a pretty lean metric there. But this is what we've been working on, which is just some more information to compare what we're spending this year over last year, how much of the budget we've spent already, how many hours this year versus last year, what the average FTE is at this point this year versus where it was at this point last year. And the headcount one's a new metric, so it really doesn't have a comparison. That would take quite a bit of time to sort through, so we'll just start from now. And then we have it broken out into the different functions is kind of what we were shooting for. So the top group is the branch public service information. That second group is the branch special services. So you can see there, like the Culinary Reading Rocket, Square One, Story Center. And then the next three groups are HQ groups. And they are, materials and circulation support. So that's collection management, delivery services, library systems, and technical services, which is where all of the processing of materials takes place. The programming support are the community programming department, the digital learning department, information and reader services and youth services, and then the operations support that you see there at the bottom. So admin, community relations, construction and maintenance, customer experience, facilities, finance, fundraising and development, HR, IT, internal communications, marketing, and security. This is, Quan mentioned earlier that this isn't how we have budgeted. So this took some working on and kind of making some assumptions at this point and some estimates at this point about how these things should be broken out. So it will get better the longer we do it this way. You can see the branch versus HQ total there at the bottom, and then the total for everything there at the bottom.
By the way, I think this is great. Thank you. So are there any questions? I know that this is, I hope it's a lot of data on here. And I greatly appreciate Jennifer, doing the work and getting this up for us to review. I have a question. Is in Michelle or Yummy, do you have any comments or thoughts at this point before I? Or Bob?
I do not have any questions. Thank you.
Okay. Jennifer,
No.
the only thing I'm sorry, Yummy?
No, I was just saying thank you. No, I don't.
Okay. Jennifer, the only thing that kind of stuck out for me was when I look up at the branch service total, the first section.
Yeah.
Last year you were at 4.8 million. This year you're at 5.9, so it's about 1.1. Is that because we've reopened?
Yeah.
Had something new? Can you just give us a general idea what's going on there?
That would definitely be that. So if I'm not mistaken, someone correct me if I'm wrong. We didn't have 3 Lee Summit branches open at this time last year. We hadn't. I know we had at least 1 other, maybe 2 other branches closed. So we're coming out of that period of time, and so that's where we're going to see, a change in how those branch numbers look.
And then back to on the question on the general fund income statement, is there anything that would indicate that we're on a trend that would take us over budget for the year? Or
the challenge of doing a monthly budget are things like, and we can see an example of this on this particular report even. So if at this point, what we should be 41% around of the budget spent for the year. But if you look at community programming, you can see that number is 84.58%. That will even out as we go through the year, but that's because we had a long tenured staff member, potentially maybe our longest tenured staff member ever, retire and receive their payout of their sick and vacation time. So those kinds of things are, they're difficult to predict. And so sometimes we see an uptick of folks leaving.
But overall, you're not seeing anything that's going to, that we have to deal with.
No, I think the other thing that I would say that we're going to be dealing with is that we're, in terms of benefits eligible positions, we're seeing a slowdown in turnover than what we were looking at this time last year.
Say that again.
We're seeing a slowdown in turnover than what we were looking at this time last year. And so when turnover slows down, we have fewer, unfilled positions.
Okay.
That are fewer dollars. So just kind of keeping an eye on that.
Okay. Any other questions, comments? Thank you. This is really, this is great. Thank you for doing this.
You're welcome.
And if you have, however you want to massage and present the data, that is helpful and kind of helps us understand the operational, what's going on operationally. I think that's the real key here. So
absolutely got it.
Okay, let's move to the old business then. Capital review of the capital fund. And this was for what do we? I don't know what we have up. This has been on the. This is our purpose today was to get further information as to where we stand on the capital plan, where we stand on funding, and also in response to the board resolution from October. So who wants to take the lead on this? Jake or Quan? What's Jake? So so we can, Cody, can you bring up I have my documents printed. I just don't know what you're looking at.
I've got a capital projects fund accounting, capital improvement plan project update revised, and then projected cash flow documents.
I'll bring up the first one you just
I
stated.
think that was the previous month. I don't think that's the one that we sent the other day.
I don't have anything. This is what's on board docs.
Yes, this is the one from board docs.
All right.
So bring that up. And go to the okay, so there are, there we go. And if you'll adjust the columns, thank you. And then the summary tab, if you just click on that, so everybody understands what the ball field looks like. That is the cost summary. So we have the two tabs. One is for the funding, or I'll call the revenue side, and the summary is for the cost side. So if you want to go back to the funding tab.
It says 118, 501, 815. That's the funding that we currently have available.
Okay, so I think the original plan was for 113.2 million, and the schedule needs to have the budget numbers on there and the variance. So if we could add that,
Yes.
so we can see the difference. But is there anything on here that wasn't included in the original budget?
The big things that weren't included were the property disposals, the old Grand Valley, the old Liberty, or Boardwalk. We realized 1.5 million on that. And then the tenant credit wasn't actually involved with that as well. So that's a large portion of it. It's the 2.6.
What is the tenant credit? 358, 800? What is that?
We took over the building for the new Red Bridge. We leased that particular building, and part of the lease was a tenant improvement credit, which they basically gave us I don't have it off the top of my head, but they gave us X amount of square foot for improving the actual space itself. And we put that back right back into the building itself. So that 358,800 was from the folks that we leased the Lane 4 that we leased from as part of the agreement to move into the building and make it into a new library.
So did we get a reduced rent or did we get cash? I'm not sure I'm following here.
Yes to both. We did get a better lease because of negotiation. But this tenant credit was actual check to us for the 358,800.
So we did this as a cash receipt. Okay, all right. Okay. All right, so I'm not going to go delve into the detail. I'm just going to take this as it is, but we do need budget numbers on here and just so there's some comparison.
Okay.
Cody, go to the next tab, if you will. All right, and if you'll scroll to the top. Jake, you want to tell us where we stand on these? What's going on?
I'm sorry, I didn't understand.
I'll go ahead and explain the schedule.
Okay, so this is all the 35 branches listed. We've also listed in column A the unfinished as to what we're still working on. I will say that Harvey Jones is we have not made any plans on Harvey Jones right now. We ended up moving the 200,000 that was originally budgeted for Harvey Jones into Smithville because Smithville was a publicly operated library and was actually serving the public. So we wanted to put. And they needed a carpet and they needed a few minor renovations. So rather than put it towards a building that we really had no purpose for at this particular moment and that was not serving the public, we decided to put it into Smithville to go forward with that. Then when you look at the rest of the branches, you can see the total expenses from a construction viewpoint, from furniture, fixtures and equipment, technology, design and survey, which is our architects, our civil engineer surveys, it's kind of basically everything that we have services for, and then moving and storage, which is basically all the costs to move stuff out when we were doing renovations and move stuff back in. Land costs as we have incurred them. This particular column has shared costs, but we had that conversation before. I have a new one that actually does not have the shared cost in it. It is actually incorporated into each of the categories as you requested. And then you've got your total. And then when you scroll over to the construction itself, this is your estimate to completion on these particular branches. And what I did was I put the proposed East Independence GMP. I've got the Grain Valley GMP. I've got the remainder of the North Oak GMP minus what we've already paid down on it. And then I went forward and I looked at our costs for furniture, fixtures, and equipment from a budgetary viewpoint on East Independence and Grain Valley, and then what we actually have spent and what we still have yet let to incur on North Oak. I did the same thing with technology and the design survey as well. Design survey is essentially the architects is a fee percentage based on what our GMP is. So what I do with that is I took the architect's percentage fee that they'd already paid down, and I took what we owe them, and that's what I put into this particular column for what we're going to incur going forward. And when you add it all up, it gives you 19,134,277 as an estimate to completion for this project, with these included. Riverside is not included in this because they're not part of the capital improvement plan. We moved them, the board moved them out of that when we did the negotiation with the city. So those numbers are not included in this particular total of 19,134,277.
Okay, that was one of my questions. So we've spent, so North Oak is not complete, correct? And Riverside, which according to our agreement, I mean, regardless of whether it was in the original plan, it is part of the plan currently. So what is an estimate for Riverside?
I believe it's approximately 7.3 million.
Say it again.
7.3 million.
So there's 7.3 million that's not in here.
All in, correct.
And then,
Sorry, this is Michelle. My mouth is open a little bit. Can we repeat all that? We don't have that budgeted? Is that what I heard?
it's not in this schedule. And
Well, I think Jake said Riverside is not in the capital improvement plan.
What
things that
am,
were
what,
in the original
what am
plan.
I, what
Go
am I
ahead, Michelle.
missing? What am I missing? Because somebody needs to, like, what am I missing? Somebody somewhere, let me know what I'm missing.
Well,
Board voted to take that out a while back when we moved it out of whatever work package it was, because we were still working closely with the city of Riverside on a new building that was out of scope of the original plan.
Okay, because it was out of scope, we took it out, but I thought we still had, stuff set aside for it, right?
that was my understanding as well.
Am I,
We had originally put $1 million from this particular budget forward, and then we were going to fund it with additional capital funds as we move forward. That was my understanding of the plan from previous.
Well, I mean, I think at this point, I can go back if you want to. We can go back to the original capital plan, and because I have a note on mine that there were items in the original capital plan that were contemplated, and there was funding included that were not completed. I guess the best example I can give you is the headquarters HVAC system, which is not done and which was pushed out. So so there's two issues here that I see. We can talk about the original capital plan, and that's the reason for putting this on the budget. All right, we need budget numbers on here. That was part of the board resolution. So we have to get this synced up to what the board originally approved back in 2017 or 18, whichever it was. That's what this document is, okay? And that's what the basis for the board resolution in October was, right? So we still don't have that. Secondly, we have to look at what is on the table in terms of commitments. And at this point, Riverside is a commitment, is it not?
Yes.
Okay, so I have 7 million on here. I guess I was not aware. Maybe I missed something somewhere. I don't remember North Oak being on the previous discussions. There were 3 branches that were on the analysis in June, and that I thought had been discussed on a regular basis. That was East Independence, Green Valley, and Riverside.
Those were the ones at the time in June that had not had a GMP applied to them. That is correct.
Okay. But at this point, this is where we are. So as I see this, if I take Cody, flip back to the funding tab.
Sorry, if I might, I think the North Oak issue is that North Oak is underway, just not finished.
Correct.
But,
So it's, yeah, so I think the previous thing was they were talking about outstanding projects that had not been initiated yet.
Yeah, and I'd have to go back to the schedule at that point. But again, and just a reminder that when the schedules were presented, the dashboard was presented, it was presented as though 84.5 million was going to be spent. The actual number that the schedule totals to is 91, I think 0.6 or 7, whatever it was. We'll call it 92 for rounding. So there's about a $7 million spread that was not on that schedule. All right, so let's go back to this summary tab, because if 118 is our funding, I'm sorry, Cody, I meant I meant the funding tab. I apologize. Okay, so 118.5 million is our available funding. Okay, we have projected costs on the other side of 121.2 million. Okay, that results in a $2.7 million deficit, just based on what this number is being presented are. If I put Riverside in there at another 7.3 million. I am pushing $10 million of a deficit in terms of our available funds. And in the capital fund, we have currently 19 million. So, all right. So, Michelle, I'm going to go back to your side. I just wanted to get that on the table for discussion. So let's go back to your question and on this, if you will. Are you there?
Yeah, sorry, I had to unmute.
Okay.
I mean, what part, as far as I didn't, do we have, I mean, we took it out of the plan because we were working with Riverside, but I still thought we had money slated for it. Am I wrong?
We didn't actually have money slated for the completion because of the change in scope. Our original budget for that was approximately $753,000.
Yeah, but we did when we started trading properties and doing this and that. I mean, we the way it was presented to us, we sure did.
Yes, Michelle. When we prepare the budget for current year, there was a page in the budget book for capital project fund. And on that page, it shows a $3 million budget for Riverside. At that time, we did not know it would cost $7 million. $7 million is the current estimate. So you are correct.
Okay.
We set aside $3 million.
Okay. I knew it was more than like one. So at least I thought I knew that. Okay. Thank you.
But let's get back to a broader issue here, okay? We have, if you take the 121, all right, and you add the 7.3, I'm just going to make sure I say the numbers correctly. So I have projected spending, okay, projected spending of 128.5 million. Is that correct?
Yes.
Yes.
Okay. And I have available funds of 118.5. I have a $10 million hold.
Yes.
Agree?
Yes. The funding of $118 million. That's the funding for the capital improvement plan. It does not include the like Riverside. Riverside will need more transfer from operating fund for that $7 million project, for the Riverside $7 million project.
I guess I need to go back to the schedules that I think were given to us in June, where we said we had enough money to do everything.
Back in June, I believe that we still use the total capital plan of $113 million as the estimate.
Well, but that's been the number that's been presented for the last year, or I mean, probably since inception.
Yes, on every budget year, yes.
But again, I'm going to point out that the dashboard was mechanically inaccurate, and it was setting the actual spending on the dashboard that was presented month to month was $7 million over what that 84.5 was. Okay. So those are the numbers, correct? We have to look at this on an aggregate basis. I can't piece out, and I can't piece out the capital plan and say Riverside isn't in the plan, and you know it's in this plan over here, but it's not in the capital plan. At this point, everything is a capital plan.
Yeah, total number is correct. And the bottom line is we need a more transfer from operating fund.
Okay.
We're over with the change of scope from the points that the board voted on, so.
For what?
I think
We
this
changed the
is where,
scope in Grandview, because Grandview wasn't, we hadn't, the original plan didn't have the addition. Lease Summit changed scope.
But, and I understand it. That's the reason we wanted a comparison to the original budget to see where funds were being expended and what we, against what the original plan was. So Michelle, go ahead with your question.
Sorry, I got to unmute again. So I guess I'm just a little speechless here because we kept looking at this and like, okay, we're taking from here, and we sat there in these building committee meetings and we were assured that we would have the money. Like we're taking from here, but we're not going to go. We're going to have savings here, and we're going to have savings here, and it's going to work out. But this is not looking to me like this is going to work out. So it looks like exactly what we said, what some of us hoped wouldn't happen, is happening. I mean, I thought the placemat was accurate. Maybe it's not. I don't know. Am I missing something? Because I feel like what we're seeing is that we've gotten to the end and we're not going to have the money because we went over on all the other stuff. So the people at the end are gonna get the shaft. Am I missing something or am I wrong?
Hi, this
Well,
is
go ahead,
Yummy.
Yummy.
I just wanted to chime in and just echo Michelle's concerns because I was also in the building committee, and at every meeting I felt like we were assured that yes, everything is great. We have enough money for every single thing. So I'm a little confused too, because now it seems like it's all of a sudden we don't have the money when we were assured that every project was covered and yeah, so I'm just a little confused myself.
I have a question, whatever you want to open this up with this
Well,
one.
it is open. Go ahead. Good. Bob.
I need to get some real history behind it. So I'm looking primarily at the final annual budget for fiscal year 2022, 2023. And that takes us back to, I think originally, wasn't the building scheduled to be for 10 years and then it was reduced to 6 years?
That's correct.
Okay. And then the bonds were sold at 80 million plus with a par value of roughly 73 million, which leads to a premium of 7.6 million. So where is the 7.6 million in the budget that I'm looking at from page 47 of the annual budget? The thing just let me ask
Where's
you
the
another way.
let's stick to that. So let's go back. The bonds were sold at a coupon rate, as I recall, somewhere in the range of 5%. Okay. The market rate at the time was, I'm going to say, a little over 200 basis points. Okay. So the recommendation of the attorneys, the finance folks who were doing this, said if in their view they prefer a coupon rate so that the people who own these, it is a little easier, and I'm quoting them and it's not, but I think that's fairly accurate, that it's easier for them to sell those bonds if they want to liquidate down the road. Okay, so the higher coupon gives them an advantage if they want to sell those. All right. So that was the basis. The board approved at that time borrowing $80 million. Okay. So those were the proceeds, or it came in at approximately $80 million. So what's happened is we've taken in the $80 million and we are repaying through the debt service payments. We're paying back that $7 million in the form of interest payments. Okay, so that's the mechanics of what is happening.
Right. All right. So if I understand that, but
I know you did. I just
but yeah, that's
everybody
fine.
else is.
That's why I want to go back to Richard. All right. So in the current budget, which you referenced, the the capital plan is 113.2 million.
That has been the budget from the get-go.
And that's in the existing, that's language in the existing budget. So it talks about this, it talks about funding sources, series 2018 certificates of participation, 80 million, capital project funds reserve. Would someone explain what the capital project funds reserve is, which is 17 million in this budget for you? What is that reserve fund?
Yes, that's the money we had in 2017 when we first started the capital improvement plan.
All right, and then
And just to, again, to be deliberate here and make sure we have everything, you have two reserve funds. You have the general fund reserve and you have the capital fund reserve, two different buckets of money.
yeah, I would assume that.
Yeah.
Yeah, thank you. But I think we're going to get to that next. And the valuation and annual operating surplus of 9. So is that from
That's
general?
yes, that's the projected savings from 2018.
To 2024.
Yeah, that's the projected surplus.
Yeah, sure. And I understand.
Yeah.
that.
Transfer to
Yeah.
capital.
And then have we met the goal of property disposal of 3.5 million?
Yes, we did.
Okay. And then the general funds reserve of 3.7.
Yeah, that's the additional.
The reason I want the budget numbers up there is so that you don't have to do this. And I like the budget numbers on that schedule, which is what the board requested in October.
So and that gets to the 113.2.
Yes, that was the original projection to fund it.
Okay, so now we getting back now, there's been some discussion about Riverside was not a part of certainly the 2016 allocation, but so where would funding come from for $7 million at Riverside?
No, we never presented a request for that much of funding for Riverside. It's a current estimate.
But do we have and then that's fine. Do we have a projected source of revenues for that? If we get to a final agreement, I think they've contributed some land. Is that?
That was a land swap. The 600, they paid $1,350,000. 650 was basically a land swap value from one corner to the other. So the net cash was $1,350,000.
But what I was trying to, ultimately started looking through these documents over the weekend. It's always exciting to read these documents over a weekend.
Is that up here somewhere? Where's the $1,350,000 for Riverside? Speak of that. Where's the $1,350,000 for Riverside in your?
That's the, if you look at, there was a land for 650,000 on the summary tab. And also there was a funding under the asset disposal.
No, I'm looking at your property disposal. Go back to the funding tab. And your property,
Since Riverside wasn't included in here,
It's not on there.
it would be there, right?
again, we have to deal with what's on the table right now.
Yeah, no, I'm just.
The purpose, so there's two purposes that we want to cover. One is we have to deal with where we are and we want to compare it to what the original 2017 approved plan was. So that's the reason it's up there, and then these things become easier to identify. But Riverside needs to be on this schedule because now I've got an inaccurate schedule. So I got 1.35 million of proceeds from Riverside. So I guess, are we saying now I have close to 120 million of proceeds, but assuming that the rest of this stuff is accurate? Is that an accurate statement?
Yeah, I believe so,
Is
yeah.
there anything else that is not on here that should be on here? Again, we have to deal with everything, not the two. I'm deliberately, I guess I'm repeating this because we have to get on the same page, okay? We have to say where we stand right now with everything that's on the table. And then all we're going to do is compare it to what the original plan was so we can identify the changes that took place and the decisions that were made. And I can't go back and change those decisions, but I do have to go back and compare what we agreed to or what the board approved 5 years ago to where we are now. So is there anything else on here is there anything else that should be in here that is not, other than the 1.35 million from Riverside? And you two guys are the only ones that know that, I think, at this point. Anything?
I don't think so.
So let's leave that an open item. We need to validate that we have the right numbers, okay? So I'm going to call it one. I'm just for the sake of rounding, okay? For the sake of rounding, I'm going to call it 120 million, all right? We have 120, actually, you know, if I do that, 121, 207. So now I'm 1,356,000 and change in a deficit, ignoring Riverside. And if I subtract 7,300, so now I have an $8,656 million deficit that's on the table. So it's no longer 10 million, it's 8.7 million. Is there anything else that needs to be on here? Are there any other costs that have not been identified?
Well, I want to
Go
ask
ahead.
that. Yeah.
Okay,
Thank
sorry.
you. So that's
This needs to be an open discussion.
I'll get back
So
to.
let's get you up to speed.
Thank you. That would be better. That is up. That'd be great. Yes, I am. One thing, I guess, the last thing I'll ask about, again, with the original 16 package that was voted on, and I know public wasn't voting on an individual package. They were voting on the tax increase to fund capital improvements for the district. Now, what I want to know, and then today is, I think I know where the Riverside situation is East Independence, and has East Independence always been in the original projects from the 16 election?
Yes.
Yes.
Okay, and then is there funding for that particular building?
As it's projected right now, yes.
Well, okay.
No, we don't have funding for everything. So I want to clarify one thing, because you're looking at and then I pointed this out, I think, in June. The schedules that Quan has in there, okay, and you can correct me if I'm not stating this accurately, are the original schedules.
Yes.
Correct? So you're looking at a budget document that includes 2017 or 18 data. It does not reflect on any of those the current activity.
And the original budget is based on the work package. Each package has multiple locations. So there wasn't a budget for each location, each branch, no.
Well,
The budget for.
no, there was. That's what this is. You have a budget for each.
Yes, but that's the proposal from SDA, not the budget approved.
Well, it's not what the committee, the building committee and the board approved. I agree, but this was the original plan.
Yes, that's the.
So if this was the original plan and taxpayers saw this and said, that's what we'd like to see, then shouldn't we be telling them how we spent the funds? And we have yet to do that.
Yes, yes.
Correct?
Yes.
We have yet to do that. We have yet to tell them what all of our sources are against the original 113. We have yet to tell them how we spent $100 million. I mean, at least I have a schedule here, but I don't have a schedule that says, here's what we planned on doing, and here's what we actually did.
Yes.
Well, so to answer your, and I think I just come back to this. I come back to where we are. And again, the schedules you're looking are outdated. Okay, that's the problem. The budget book is not an accurate reflection of what where things were.
Well, I think that
at the time of the budget. in 6 months ago.
Yeah,
right?
that would be the time. That's right.
So-
That's what I'm reading from is a final annual budget.
Right. But those are not updated schedules for what actually was spent. Those are the original plans. So I still think we have an $8.7 million hole. That is the issue at hand. And I mean, there's nothing the committees can do right now. I think the question is we need to get these schedules corrected. And this is the basis for the discussion on Tuesday at the board. So any other comments, Yami or Michelle, before I kind of,
Well, I mean, I guess I'm trying to figure out, you say there's a hole of 8 point whatever million. Susan and Jake, is there a hole or is there not?
I think that's an accurate statement.
That's an accurate statement.
Well, then can someone explain it to me?
well, Michelle, the simple answer is they spent more than what was budgeted.
Well, I mean, I'm asking for that.
I can't tell you where it went because I don't have the data. Again, go back to the summary tab and there should be a column. There should be 2 columns, okay? One column is going to say, here's the number that were originally estimated. This is page 9 of the 2017 revised and updated facilities assessment and capital plan.
Uh-oh.
Okay, and then still there. Okay.
Okay, sorry, my phone is messing up. So I mean,
Okay.
so I didn't hear part of it, but I'm asking for them to explain it. I mean, I understand what you're saying, but I'm asking.
Okay.
I mean, don't just tell me it's inaccurate. Can somebody explain to me why it's inaccurate? Because I feel like you guys should be able to explain to me why that is an inaccurate statement.
I'm still looking into a fair amount of it. I know that some of the dollars that we were looking at were allocated from an accounting issue differently. When we were looking at the construction versus the budget. Hindsight being 2020, we should have been conferring with a little bit more in the accounting range versus the construction budget. But Michelle, I will get you an answer. I don't have an exact answer for you now.
Okay, well, I mean, because at the end of the day, I mean, not to be, but the buck stops with you. You're supposed to be living, eating, and breathing this. Like, you should be able to answer this for me. I mean, that's my opinion. I could be wrong, but I mean, this is you are the one that has known, you know, that dashboard and everything back and forth. So that's kind of where I'm at is and if, you know, and then Susan should know it too. So, I mean, I just don't want to play this. Like I said, if it's inaccurate, just be able to tell me why. And when do you think you can get the answer for that?
Sorry, I'm just sitting here. I'm just trying to help with communication here. I believe tell me if I'm wrong. I believe you guys said it was an accurate statement, not an inaccurate statement.
Correct.
Right. Yeah, they said Michelle, just to clarify, the 8.7 million deficit is an accurate calculation or estimation of the deficit we have from projected spending against funding or available funding. But that, I don't think, I think your question was, you know, can we explain, and I guess I'll chime in here if that's okay, as to why. That's, again, I'm just going to state the obvious. That's why I wanted everything to be lined up against the original budget. So you had an original plan. Where you stand is, you know, once we get the corrected numbers up here, is where things are, and there's a gap. And we have to see where the gaps are and you know, and just lay that out. But that doesn't eliminate $8.7 million of that deficit for funding.
There was a small reason. I believe it's a misunderstanding. For example, Farview that's not in the original plan. And we spent about close to $160,000 out of the capital project fund for Farview. Also, Riverside, as we discussed, it was not in the original plan, but the land cost $650,000, and other things we spent about $775,000. And we will need another $7 million to finish it. So Farview plus Riverside, that's about $900,000.
I'm sorry. So you're saying Riverside is going to cost us $8 million?
Is that correct?
Yeah, the 650, I mean, and I'll pull up the document from way back when, was the land swap value. There was no cost there that I recall.
Yeah, I'm talking about accounting wise, there's a cost for the land of $650,000.
So you're saying there's 650 in the 775?
Yeah.
So over here, I should have $2 million on my, I should have $2 million on my funding side.
Yes.
Yes.
Yeah.
Sorry, Michelle, numbers keep moving. Well, we're still at 8 million. Still, we need accurate schedules. We need these against budget. These have to get ready before the board meeting, or we're going to have the same discussion at the board meeting. And I think the board needs to see the numbers where we stand, what the original plan was, and what the variance is, and we need to see, and as I calculate, deficit is approximately a little over $8 million. So let's get this nailed down and not have stuff flying around at the board meeting.
Okay, I'm sorry, I have to get off.
Okay, well, okay, so
Are we about done? Are we about done?
Yeah, well, I'm done with this one. I think the only thing that is, I guess, the options for the board and help me or giving me your thoughts here, right? I wrote down some things. We have cash flow issues, and now we have a deficit issue. So there are options for the board. One is called used operating reserves that we have, which when we'll look at the cash flow, is going to put us in a very tight situation, potentially. We have talked about selling bonds, but I don't think selling bonds is really an issue here because we have a hole regardless of what we do. But selling bonds is cash flow. Someone had mentioned possibly deferring payments. I don't know that that's even an option. So the last thing is to defer or reevaluate projects and or needs, and that is a broader discussion. So anyway, that's, I guess, we'll talk about Tuesday night. I don't have anything else on this. And I don't think there's any, I mean, we can talk about cash flow, but cash flow is not going to fill $8 million. You still there? Michelle,
Michelle dropped off.
we lose you. Yummy, are you still there?
Yeah, I think I'm here. I don't know. Sorry.
Yeah, no, okay. Just to make sure you didn't
Okay,
lose service.
I heard what you said. So, all right.
Okay, thank you.
Thanks.
Well, that's correct. I think there's whatever the amount. So there's a deficit here to fund everything from the original proposal.
We need schedules accurate. I don't know why this is so hard. I really don't. This is basic accounting. This is basic presentation. The board deserves to see this. The public deserves to see this, and we have done nothing. We have asked for this for months, and I'm not happy that we don't have it. The board resolution reads as follows. Number 2, a summary of all expenditures incurred plus those yet to be incurred to complete the plan in comparison to the original estimated cost of the 2017 plan. Presentation shall be on a branch location and category basis in a format similar to those shown on pages 8 and 9. in comparison to the original estimated cost of the 2017 plan right here, okay? So let's get that done for the board meeting. And I would like to see a draft of that as soon as possible. Okay. All right. Who's talking about the culinary center?
That would be me.
Okay.
Good morning, everybody. My name is Andrew Winkle. I'm the director of the Culinary Center. Thank you very much for taking some time to chat over this topic again, over cost recovery for the kitchen incubator. I provided some updated projections for what our costs will be and what our anticipated revenue is going to be. And I took into account a lot and really all of the considerations that were brought up. I know we were talking about reapproaching the amortization schedule. We had talked about staff and really refining some of those numbers. So I've worked with Quad on this to really get something more refined as our projection. The bottom line is we're probably still looking at about a $20 an hour rental fee for that kitchen space. And then between $20, $50 per unit of storage. But pretty much everything that's being accounted, we also added in part of the operation, taking into consideration some of the staff time and resources from HQ. So I think those were some of the biggest items that had changed from the last time that I had the chance to talk with you all. So with that, I mean, I'm open to any questions, comments, anything else.
I guess I'll go first. You said you've included, and I see staff time here.
Yes.
Okay. I see the costs over here. I guess I'm the $20 an hour sounds incredibly low. I don't know why. It just, like, you know, when you do the smell test, it just seems low. And have we benchmarked that against? I know one of my questions was you have a facility cost of $418,000, which is about 3% of the $14.4 million construction cost for Green Hills. So is that about right? That the kitchen, the whole culinary center is only 3% of the total?
No. So my calculations take into consideration the incubator portion specifically, not the whole culinary center. So my approach on this is what is specifically allocated towards small business use. Because otherwise, then those small businesses are subsidizing parts of the building that are of no benefit to them. They're not utilizing that. So I'm looking at about the 2,000 square feet that is specifically for, that's really the space that they're renting. They don't have access to the teaching kitchen. They don't have access to the other components in the culinary center.
You have 209 square feet here.
That might be a typo on my part. So that should be $209 per square foot of specific building cost. So
how many
good catch on
square foot of the square feet that are dedicated?
2,000.
So again, pardon me?
2,000.
To the incubator portion.
Yes, exactly.
Okay. And what is the total then?
Just under 6,000 if you're including, you know, our offices and maintenance and the whole chunk of that building.
Okay, so what is the total footprint of the entire building?
Of the entire building, that would be, and correct me if I'm wrong, 35?
5,000
It's a little under 35.
Okay.
Say 34.5.
All right, I can do math in my head, but I'm not going to. So that's 5.7% of the total cost. So we're using half of that.
Let me look it up and make sure.
And we're pulling out specifically that equipment cost as well, because there's a higher concentration of equipment in that whole building component of the projection.
you're pulling out the equipment cost. Can you clarify that for me?
So I looked over, so the whole project cost of Green Hills of about 10.9 million, again, correct me if I'm.
Project cost?
So
14.4 plus million. Now that
You're using the GMP.
well, okay, so just, all right, just peg me for a minute here.
no worries.
Till I get the schedule up here, because that's probably not. Because that includes some other stuff that I probably shouldn't have included. So let's go back to Green Hills. I have 10.3 million for construction, 590 for FF&E. So where is the kitchen equipment in? Is the kitchen equipment included in there? Because I have so I have technology of 150, design and survey of 1.4 million. Some moving costs, land costs, and shared costs of 345,000. But I'm assuming Quan or is the 590, Jake, does that include the kitchen equipment?
Half of it is. We have a deposit of half of it.
Okay, so
But you accounted for it individually outside of.
Yes.
right,
Yeah.
so we're really working at 10.3 million on 4 point, not
I apologize. The actual square footage is 36,274. I was thinking of Colburn Road.
okay. So let's go back to so that I need to get clear and Bob's new, so let's get him
Absolutely.
up to speed
yes.
on what the components. We have a 6,000 square foot culinary center. 2,000 or a third of it is dedicated to the incubator portion,
Yes.
correct? So your cost calculation should include everything that pertains to that. Again, if I'm going to use your words, that we're not, one side's not subsidizing the other, correct?
Yes.
Okay, so 418,000. I don't mean to double check your math here, but
No, that's fair.
wait a second, 277 divided by 36,274 is $283 per square foot. So does this all, okay. So we're using 209. Can you explain that variance? And I'm not, just.
So I had been working from the published numbers on the construction costs for Green Hills. So taking that 10.9, what I saw in the article. Anyway, dividing that up, amongst the square feet, and then pulling out what would be the some of the equipment portion of that. I think that came to a number, including all of that, about $360 per square foot total building, which is a little higher than the average for the whole library center, again, because of the equipment cost.
Can I have you rewind the tape? You
Yes.
said the source of your numbers was from where?
It was, so the original calculation I was looking at, it was the published number. So there's an article, it's got the total cost for Green Hills.
The published number from where?
That might have been the landmark.
So why are we not using what's on our accounting records?
And we can.
The only thing that every dollar that gets spent lands in an accounting bucket, okay? Our cost calculation has to be against what we actually incurred and that should be reflected on our books of record. And if it's not, that's a totally different issue, but I'm confident that Quan has everything captured correctly, okay? So why are we not using that for our calculations? Because that's what we have to recover.
And I think that's.
So that you're saying that these are not based on his numbers.
And we can refine that. I think the bigger picture on this particular is the building cost itself amortized over 30 years really doesn't have too much, whether we shift that to 35, whether we add a bit here, we calculate that or massage it or look at it different. I think at the end of the day, it won't have a huge impact when we calculate towards. So I agree.
I
We can absolutely
disagree with you, okay?
get these more refined. And I think that's true for any of the numbers, is that I can always do a better job of connecting with the fellow staff and making sure that what I'm calculating is as accurate as possible. And as we actually get into operations, I will have much better idea because we'll have actual clients and actual revenue. I think for the purpose of this exercise, I definitely want to make sure that I'm taking the right approach and getting within a reasonable ballpark on that. So to that point, I can absolutely get that more refined. I don't believe as we were going through, as I was getting more information and adjusting this, that component wasn't having too much of an impact on the overall, once we got way down into just the per hour cost. So that I can get more accurate, but I don't think it'll affect the overall picture greatly.
I don't, and I respect that. I just think for the sake of clarity, that we should be using our numbers and the real numbers, and the guy sitting over there has those.
Very fair.
Second thing I have, and I notice you have a HQ support services, so that answers one question. Your insurance cost estimate of $340. I don't know where you got that. I would suggest you take a look at that again. And in regard to insurance, there are two issues, especially in light of the fact that we have, this is a totally different environment from a branch standpoint. You have, I think, I'll defer to the insurance guys, but you have work comp exposure on this at this facility now. Okay. So who is liable for that? Who is going to cover it? Most of these small businesses probably either don't carry it, or the owner operator, in which case they technically self-insure, but the statutes control that. And I would strongly encourage you to get clear on that, because there is liability one way or the other.
Absolutely. No, great point. And that is something that we've built into our agreements, worked with our insurance company on, to make sure that when those businesses sign on, that we are verifying that they have, the general liability.
Okay, so you're getting certificates of insurance.
Exactly.
And that's also for general liability, correct?
Yes.
Okay, all right, thank you.
Yeah, we've sorry if I can jump in for a second. We've actually been through both a review from our insurance provider and also legal review.
Okay, all right. And I know I have probably asked these questions before, but I just want to make sure that we cover the bases. Okay. Bob or Yummy, you have any questions?
Not tonight.
Okay.
No, good.
All right, I'm going to move on to 6.3. Is there anything else? All right, thank you. 6.3 is the central banks agreement. This we've already, I think, already know about. This is the amended fee agreement with them. The flat annual fee for $30,000 per year, and this continues until we change something or we do things differently. I'll just leave it at that. But this was posted on board docs, and and I think all I need on that is a motion and a second to approve it and make the recommendation to the board to approve it. So that the motion is to recommend to the board to accept the central bank agreement as presented here. Teresa, you can fill in the blanks. So I get a motion on that. Robert Young.
Yes, I move that the investment management agreement Central Trust Company be adopted.
Yep.
Be approved.
Yummy, are you still there?
Yes, she is.
Yeah, okay, I'll second it.
Good, because you're the only one left.
Still have a quorum, so you can vote.
All in favor, say aye.
Well, wait a minute, I wanted to discuss.
Oh,
it.
you want discussion? I'm sorry, go ahead.
Well, I just leave it open for discussion. Yeah, so I'm just trying to, let's see, I had a question when I read it. Now I can't remember. So Gordon, what are your thoughts on it? Do you feel like it's,
So we met, Quan and I initially met with them in early October.
End of September.
End of September. We were paying a 15 to 20 basis point fee against assets. As you recall, we've followed the Missouri statutes, which are very strict on what we can buy, and basically you can buy treasuries, agency bullets, I should say, bank CDs that are FDIC insured, and Missouri municipal bonds. So it's a pretty tight structure. We asked them to reevaluate their fees. So this 30,000 is less than half of what the fee we were running was, which is, I think last year was paid 66,000. So this takes us to a flat fee on a basis point. This gets us down into the middle upper single digits, which I think is a very fair rate. And it's good for both sides. And it keeps it in central bank behind what I'll call behind the gate of a trust department. So we have good internal control over the assets, and it is a fair fee, and Quan directs the duration of where the assets are invested. So this is a good deal for both sides, and I recommend we approve it.
Yeah, it really seems like it. Yeah, and I think that would be good, Gordon, if you can explain something like that at the board meeting, but sounds good.
Okay, so all in favor, say aye.
Aye.
All right, that's me too. So, okay, the only other, any other business, the only thing I wrote down here is what is the status of the Prop L review RFQ?
It's in the final stages of review.
Okay, so we will see that when you say it's in the final stages of review.
The SLT has discussed it a few times, and
Yes.
Senior.
I'm sorry, the senior leadership team.
Sorry.
Apologies, shouldn't use acronym. Has discussed, and I'm finalizing some of the things because I had originally put a little bit too much in one and the other, but I am working on it.
Okay.
I've been focusing more on this right now, but
That's fine. Okay, but I want the committee to have time to review that and get feedback so we can get that out the door in January. Okay. All right. Any other business? Yummy, Bob?
No.
No.
All right, can I entertain a motion to adjourn?
I move the meeting adjourned.
Second.
All right, thank you. Yeah, I guess I have to all in favor, say aye.
Aye.
All right. Yummy, yes.
Yeah, no, yeah.